if you're new to this space and you're not familiar with some of these products like the ticker symbol AI or NVDA, or TSM, I would just be wary of products that if you question it, if you're like, are they really going to be in the AI space? Are they not? I would kind of stay away from those. I would stick in particular to the tech stocks that are well known, very similar to my answer with EV and sticking with, your Fords, your GMs, your Teslas.
On this episode of Early Bird, Mike Butler, host for TastyLive.com. Mike joins the podcast today to talk about his top stock picks in the electric vehicle space and for artificial intelligence, including EV stocks to avoid. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, Mike, welcome to the Early Bird podcast. How are you doing today?
I'm doing great. How are you doing?
Doing wonderful, given the state of the stock market and things. We are talking about EV stocks and artificial intelligence stocks today, two of the most popular categories among traders from 2023. But before we do that, Mike, let's talk a little bit about you and your background. In about 30 seconds or less, how would you sort of describe to our audience about your background and everything?
Yeah, it's a great question. I went to school for everything but finance. I'm a self-taught options trader, and I've always had an interest in teaching people. So that's pretty much what I do now on Tasty Live. We run a show Monday through Friday, basically when the market's open. And I have a show on that network called Options Trading Concepts Live at 11 a.m. Central every day. And I've been doing that for almost a decade. So it's been quite the journey. I've seen a couple of different market environments, and I think we're in a very interesting one now with tech stocks, EV, you name it.
Oh, yeah. I mean, these are stocks that are in focus, and we get a ton of questions about these two categories. So let's sort of get into it, Mike. I guess which of those two categories would you like to talk about first, AI or EV?
Let's do EV first. I think EV, everyone's talking about AI. Let's go against the grain here. We'll talk about EV and some opportunities there, maybe some cautions as well. But I think it's definitely an interesting space. What are your thoughts?
That's a good question. I think you obviously Tesla is certainly the king of that space, but then you have a lot of upstarts, at least among publicly traded companies in the EV space, as well as legacy car manufacturers who are trying to get into it. I guess for me, the big issue that I keep hearing about is demand in EVs has decreased in 2023, and it's impacting what some of these EV manufacturers might have to go through. Are you seeing something similar?
Yeah, I mean, I think it's interesting. I do agree with you. I think that where you can get a quality EV right now is pretty limited. You have different companies that kind of offer different things. So in my mind, you have your Tesla, which is kind of like your sports car type brand of EV. Then you have Rivian, which is more like utility. But I'm glad you brought up the legacy automakers because recently Ford and GM signed a deal with Tesla to pretty much adopt their charging system and their charging port. So from rumor on the street has it, I don't have an EV just yet, but rumor on the street is that Tesla charging ports are much more readily available. They're like right off the highway. Some of the other companies' ports are much harder to find, not as convenient, sometimes in dangerous areas. So the fact that these two big companies in Ford and GM have signed this deal with Tesla kind of opens up the door for more demand down the road, a seamless transition from a regular combustion car to an EV. So I actually kind of just to go right into it, I think that Ford and GM are interesting targets for longer term investments, especially with Ford and GM really not participating in the EV movement, not even close to the gains that we've seen in Tesla this year. So down the road, with Ford and GM now adopting these much more readily available charging ports that are the same as Tesla, I think you have an interesting situation where it's good for Tesla, but it's also good for making it easier for people that want to get into the EV space. And from my experience, there's always the people that don't really care about what car they drive. They want an economical car. But then you have people that really like to buy American-made cars. So I think that could boost supply, boost demand down the road for both of those products.
Absolutely. And I want to kind of go into that point that you brought up, General Motors and Ford, obviously legacy companies, both right now have stocks that have been hammered this year and from a valuation standpoint look more attractive than some of the EV names on the market. There have been some rumors, Mike, and I'm sure you've heard about this, where it's probably just talk at the stage, where GM might separate its electronic vehicles business away from its traditional car business. I don't think that's going to happen, but there's been talk about it because obviously the EV business right now is not generating money, unlike the traditional business. Do you see that ever happening? And if it did, what impact would that happen in the EV space?
Yeah, I mean, I think it's interesting how they will kind of play out that narrative, but I'm not too sure that there would be too much leg to that. I mean, when you think about the potential for an electronic car, an electronic vehicle, and just how different our world could look in 10 years, I think it would be somewhat of a mistake to separate it and not really hammer out the opportunity there. But especially after this deal, I think for me, the deal kind of creates the point that if they're making this deal and they're making it easier for people to charge their cars and just use these cars, I think it bodes well for the future demand and future supply initiatives that both of these companies would have. So yes, anything could happen, but I'm kind of in the camp that they'll probably shift more towards the EV space down the road. It might not be next year, maybe in the next 5 years, but as our society changes and shifts with this as well, I think both GM and Ford will kind of follow suit.
Oh, absolutely. That's sort of where the industry is trending. Mike, going back to the issue that I brought up about demand, I'm sure you know that a few months ago, Tesla lowered its prices for a few of its vehicles. Are you concerned at all about demand in the EV market at all, or do you think it might grow over time?
I think it'll grow over time. I think it's kind of par for the course for anything, right? I mean, you have this shiny new toy. Everyone's talking about it. Everyone wants a Tesla, and it went from, or I think it will transition from, kind of this niche boutique item that people buy to something that is available for everyone to buy at all price points. So, I kind of relate it to a totally different market, but like think about TVs or something along those lines. Like you have this shiny new 60-inch TV, they have some kind of new technology and it's like $3,000. And then 2 years later, it's the same exact TV that people paid $5,000 for is now is now available to purchase for like $400 or $300. So that's kind of the way that I see this market moving. Of course, you're going to have the ability to really spend up and get the luxury brands or the luxury autos. But at the end of the day, I think all of these automakers will have some sort of economical version of the EV. And I think that's just kind of the natural path here that we're seeing rather than a reaction to supply and demand, just because I think people, especially in the US, I think people want to be more green or use clean energy. So I think that kind of plays into that as well.
Absolutely. I think that's sort of where the trend is. Real quick, Mike, are there any stocks in the EV space that maybe you think investors should stay away from, at least in 2023?
That's a great question. I mean, I think if you're investing in this space or you're trading this space, I think you just have to buckle up and get ready for the ride because a lot of these stocks, whether it's Tesla, whether it's GM, Ford, and interestingly enough, a couple of months ago when Tesla announced that deal with GM and Ford, it was in the beginning of June, and I think it's an important point that I'm going to bring up later when we talk about some other stocks. But beginning of June, Tesla rallied. It went from 160 to almost 300. Same thing with GM and Ford. Beginning of June, GM went from 32 up to 42, 41-ish. Ford went from 11 all the way up to 15. And all of those have sold off pretty significantly. Rivian, same thing. Beginning of July, went from 13 all the way up to almost 30. Huge moves there. So I think instead of looking at it from a lens of maybe wants to stay away from, maybe wants to invest in, I think at the very least you need to make sure that you realize that this space is very volatile and will continue to be very volatile as it kind of moves through the narrative and we kind of hammer out these details that in uncertainties, of course, in the industry because it's so brand new. But I like to take the traditional investing approach and trading approach. If I'm trying to stay away from a landmine, I think trading products that are well known, trading products that have a lot of volume, whether it's stock volume, options volume, open interest in the options case, I think that can only help you avoid a big move. So like Tesla, Ford, GM, yes, they've had volatile last couple of volatile months, but they are household names. They are heavily traded. Where Rivian, on the other hand, it's moving in a similar way, but Rivian is less of a household name, certainly lower volumes across the board. So if I were to pick one where I might stay away from if I was trading one of those four, it would probably be Rivian just because of the lack of volume and open interest. But again, Rivian offers a different product than Tesla does, at least a little bit, and also Ford and GM as well. So for me, I would say for conservative people out there, maybe just stick to the household names where you know people are going to be trading it. They can still have big moves, but at least you know that the volume and activity is there.
Good point. When we return, we'll hear from Mike about AI stocks in the second half of 2023, including top stock picks and stocks to avoid. But first, let me tell you how you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Mike, let's shift gears and talk about artificial intelligence stocks. Obviously, that's been one of the big topics this year in the stock market, the rise of AI and the companies that are using this technology, specifically generative AI, to their advantage. And a lot of investors are flocking to these types of stocks. What do you make of the AI space going into the second half of 2023?
I think AI it's an amazing phenomenon because we have, when you think of the general market, we had all of this worry. We have all of the talk of inflation and recession possibilities, et cetera, et cetera. And then all of a sudden AI steps in and just takes the market to the moon, specifically a lot of these tech stocks like Google, Microsoft, NVIDIA, specifically AMD. Those sort of products have really taken off, and I think it's here to stay. I mean, it's not this bubble. It's not a bubble like maybe we saw with the marijuana industry a couple of years ago, but AI has transformed the way that we look at things. It's transformed the tools that we use. Google and Microsoft specifically looking at implementing certain AI tools in a lot of their products that they offer. So it's definitely here to stay. And I think it can only help the tech sector. It's definitely going to create more volatility around the tech sector, which we've seen as well over the last couple of months. But I think there are some opportunities from what it feels like in the market and what we've seen. I think NVIDIA has been kind of the lead ship in that voyage in the terms of AI boom. We've seen NVIDIA go from in the beginning of June. I'm going to keep coming back to that because the beginning of June was kind of when all these stocks started taking off, and NVIDIA rallied aggressively from 280 all the way up to a high of 480. And you see some of these other stocks that are definitely going to participate, but maybe they haven't just yet. And I really think that right now, through the end of the year, volatility in the general market, thinking of the VIX, we're still in the teens in the VIX, which tells us we're kind of in that middle ground. We're at that average in terms of implied volatility for the overall market. But I would like to call out Apple in particular, just because when I look at a lot of these stocks, especially the household name stocks where everybody, almost every household in America has some sort of product that is offered by Apple, Microsoft, NVIDIA, Netflix even. So looking at Apple specifically, this stock over the last week, the last couple of weeks really has come down from the highs right around 195. And I think it's interesting when you look at the time frame of where the stock is now relative to when the boom happened with AI. So I keep coming back to that beginning of June when NVIDIA took off and AI took off and TSM, another one that I'll talk about in a little bit. But if you look at a chart of Apple, you'll see that Apple is right around the price that it was in the beginning of June. So ultimately, you're getting the current price of Apple. If you are an Apple bullish person, if you're bullish Apple, you think it's going to rally back to the highs it's realized this year. Apple is pretty much trading around the range that it was in beginning of June before all these other stocks took off. So I think that's interesting. But again, you have your NVIDIA that's been flying around like crazy. And TSM, I think, is another one. TSM, we've actually had one of my colleagues write an article on tastylive.com about this. But TSM, when you look at price to earnings ratios, PE ratios, the difference between TSM and NVIDIA is so staggering. It's a massive difference. And TSM is still producing plenty of gains on the year, but it's not nearly as much as NVIDIA. And I think that could be related to just the fact that TSM isn't necessarily a household name. But if I were to hang my hat in two products that I kind of like just to keep an eye on through the rest of the year, in this sector in particular, I would say it's probably Apple, see what they do there, and TSM.
Interesting. Those are two good stocks in that space to look out for. Real quick, Mike, in about a minute or so, what are some stocks that are dabbling in AI that maybe investors should avoid, at least for the time being?
Yeah, and I think it's a great question. I mean, I would say be very wary of stocks that you normally wouldn't expect to be in the AI space that are now talking about AI on their earnings calls. There's a lot of companies out there. It's hard to name one in particular, but back when we had the blockchain boom and the Bitcoin boom, I remember, I think it was Green Mountain Coffee Roasters was talking about how they're going to start using blockchain, and their stock rallied to the moon for no reason. Radio Shack was another one that mentioned blockchain on their earnings call, and it sent that stock to the moon. So if you're new to this space and you're not familiar with some of these products like the ticker symbol AI or NVIDIA, or TSM, I would just be wary of products that if you question it, if you're like, are they really going to be in the AI space? Are they not? I would kind of stay away from those. I would stick in particular to the tech stocks that are well known, very similar to my answer with EV, and sticking with your Fords, your GMs, your Teslas, household names that are traded a lot. Look at the volumes of the shares that are trading each day. Make sure the options markets are liquid and active if you're trading them. But that would be my overarching suggestion would just be to, avoid the stocks that are talking about AI that you might not really think are gonna stay in the AI space.
Yeah, it's certainly an interesting time right now to be in the stock market, looking at all sorts of companies that have not traditionally been involved in technology or at least in artificial intelligence, and now they're including that buzzword in their earnings releases. It's incredibly interesting. So Mike, real quick, in about 20 seconds or so, what are you are you still bullish on AI as a big investing theme for the rest of 2023?
Yeah, absolutely. I think AI, again, is here to stay, and tech has been transforming the way we look at things. Just think about, 2 years ago, you didn't have the ability to ask a chat bot, everything about the world and have it give you a pretty good answer. So I think it's going to transform the way we work. I think it's going to transform the way we mine information and data. So yeah, I think it's definitely here to stay. And just like anything else, you're going to have companies that use it well, and that might be reflected in their stock price. You're going to have companies that don't use it well, or maybe don't use it at all and kind of fall behind the curve. So again, I think just make sure your risk is in check. Make sure you are doing your due diligence when it comes to investing in something or fading something. If you're taking a bearish stance, make sure that you have your logical reasons for it, and also, have a plan for when things go right, when things go wrong. I think that's the best way to approach anything, but especially a volatile market like the AI space and the EV space for that matter.
Well said, Mike. Thank you so much for coming on the Early Bird podcast today to talk about EV stocks and AI stocks in 2023. It was really great commentary and really great insights that you brought on here. Before we wrap up the show, I just have one final question for you, Mike, and it's the most important question of today's discussion. That question for you, Mike, is if you took a year off and could do anything you wanted for that year, what would you do?
That is a great question. Well, my brother has recently moved to Hawaii, and he's on Maui actually. So thoughts and prayers to everyone out there that's affected by the fire out there. But yeah, if I could take a year off, I would go join him in his kite surfing and surfing endeavors instead of just watching videos of him do it. That's my final answer for sure.
Thank you again to Mike Butler for sharing your insights on EV and AI stocks. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.